Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, our guest is Tina Azarvand, and she is the managing partner of Azarvand Tax Law. Welcome, Tina.
Thank you for having me, Gary.
So, Tina, so you have two pieces here. You have the law piece and you have the tax piece. What is it that made you decide to really punish yourself and do both?
That's funny. Actually, I love it because tax law, unlike a lot of different areas of the law, it applies to every single person. Whether you're a wage earner, you're self-employed, it doesn't matter. You may or may not need a tax attorney one day. Hopefully you don't, but it doesn't always, it's not always a bad thing if you do need a tax attorney. You can be doing tax planning, preparing for a large transaction, something like that, but I just really loved, how I was able to work with individuals and businesses, and it really applies to so many different areas of the law. Sometimes I'm helping someone, negotiate a contract when it comes to the tax provisions, or I'm defending someone in front of the IRS. No day is really the same, and that's something I really like about it. So.
Right. Now, how does your firm, uniquely help the small business owners?
Yeah, so that's a great question. Growing up, so both of my parents are small business owners, so I really wanted to gear our services towards helping small business owners and self-employed individuals. So we do that in a variety of ways. Number one, we try to keep everything in-house to just simplify the process. You typically have a CPA, you have a tax attorney, and a bookkeeper. And a lot of the time you're dealing with three firms when you don't always need to be. Mm-hmm. So, we try to work hand in hand. Typically people already have a CPA, but as a tax attorney, we try to always be in communication with them and make it where they're not having any kind of miscommunications. If they need a bookkeeper or they need someone to prepare delinquent tax returns, we have people on hand to do those types of things, because a lot of the time, tax attorneys will be like, oh, sorry, we don't help with that part, right. So we try to avoid that. Another big thing is we try to be more accessible. We do offer services in 4 different languages, and we hope to expand on that more, but English, Spanish, Filipino, and Japanese. So, we're able to help people more comfortably communicate in their own language as well. Right. And then just kind of being there to, provide a little bit of the hand holding that isn't as typical in the industry of, checking in, making sure they are making their estimated tax payments, asking if they have any major life decisions coming up, are they looking at purchasing property or selling property, and helping them actually prepare for those things, even if it's not just related to their business. So we try to be, all encompassing, just helping them with tax planning and avoiding any kind of tax issues, and really having it be more personalized. It's not just, oh, we're here to just perform a legal service. We're here to consult with them and help them build their business as well, because, I have seen myself, it's difficult for people to go out and find a practitioner like that. Sometimes they have to go and, they get through a few different practitioners until they find someone that, really is there for more than just, filing as needed, or, oh, you can hire me for this limited purpose of this IRS issue, but just someone who will kind of do it all.
Right, so. Right. Now, and I'm sure you guys do have those clients that you're dealing with just, tax issues with the IRS or the state. In many small businesses, they struggle when they do go through an audit. What are some of the common mistakes that you see the business owner make, when they do get that audit letter?
Yeah, so, that's a great question. It really depends on the type of audit. I will say one thing I want to point out for business owners, an audit or a type of audit we've been seeing more, or just where people are subjecting themselves to an unsuccessful audit. If it happens, they're in a bad situation is inadvertent S Corp terminations, or not doing what they actually need to keep that S Corp status. So
Right.
sometimes people will be like, oh, money's tight this year for the business, I'm not going to pay myself a salary. And, you've inadvertently terminated your S Corp status, so things like that. I'd say the biggest failure we see is like someone actually sitting down and tax planning and making sure, am I in compliance of what I need to be doing? And am I subjecting myself to any kind of unnecessary risk? So that's, S Corp audits we're seeing a lot of lately. And then sales tax audits are another big one, just not keeping receipts. That's like, and that's income tax audits as well, but sales tax audits, they really get you, because if you can't prove you paid sales tax, they'll go after you. Or even if you bought something out of state and you can't prove it, they're going to hit you with use tax. So the importance of, having good record keeping, I recommend to everyone, I'm sure you're probably the same, QuickBooks, have something like that in place. It saves you a big headache down the line. But yeah, I think the biggest failures are, not proactively thinking about compliance of, am I causing an issue for myself down the line? And then also just not properly keeping your records. You should be really keeping those for at least, 7 years is safe. Oftentimes you don't really need them that long, but you should keep them that long just in case. So I always say 7 years, worst case, you scan them in Google Drive, OneDrive, whatever it may be, more ideally uploading it to QuickBooks.
Sure.
But yeah, those, if I had to summarize it, those would be the biggest failures we're seeing. And then probably ERC is the other big one, is like people just like trust what they've been told. And like, there's even a lot of like, tax preparers that, are with actual firms, and then they've just like kind of prepared frivolous claims. They're not getting second opinions from their actual tax practitioner who has been assigned, or not assigned to their case, but, been working with them for years, not just someone who came in for that limited purpose. So I'd say the third one is probably turning a blind eye and not like double checking that your ERC is valid, because the IRS is like coming after ERC super hardcore right now.
Yeah, I think, a lot with the ERC, I think it's the just like everything else that's out there, there's a lot of people that were scamming people and, setting up a business only for the sole purpose of doing ERC. And to me, that's, all kinds of red flags go off when somebody sets up a business just for a, particular limited thing.
Yeah.
For sure. I want to go back to the S Corp compensation that you were talking about. Everybody kind of runs into problems with that lots of times because, IRS code says that you have to take reasonable compensation. Well, what's reasonable? Do you guys have a kind of a loose definition of what you guys use for reasonable compensation?
It's really just what it would be reasonable to expect someone to accept if it were a paid position. So sometimes looking on Indeed for similar positions, even if it's not in your same state, somewhere that has a similar wage is a
Right.
good, safe way of being like, because if the IRS audits you and you're like, hey, we based this amount based on what the going wage was for it on Indeed or Glassdoor, whatever you use, that would be my biggest thing. One thing I want to mention with that is the IRS did release special guidance. I think it was 2022 or 23. I think it was 22 for inadvertent S Corp terminations. So they've explicitly said you don't file for a PLR. They have a new process for people who did that. So if that ever does happen, there's a way to fix it, and basically you're retroactively fixing it. So it's not the end of the world if someone's terminated their S Corp status, and it's actually not as complex to fix now that they've issued that guidance. But yeah, it's very important, and that's the biggest failure. You don't really ever see someone going over, how many shares you can hold. That's you don't really see that ever, honestly.
Right,
it's
right.
always the reasonable compensation that gets people, because they just don't know, that, and that's what gets them is, and then their tax preparer, even if they're a great CPA, they go in the end of the year and they're like, why don't you have a W-2? What's the issue here? And then it comes
Yeah.
out of the woodwork. So
Yeah, I think it's, I like, that, you're saying that, hey, look at what you would pay somebody if it wasn't you, what would you
Yeah,
pay somebody to do this job? And you're not going to pay somebody, $50,000 to run $1 million company. I mean,
yeah,
so it's, just little things like that I think, um, and I'm sure you and I look at a lot of it is it's like, okay, this is just common sense, but
yeah,
we have to, we have to say it. Uh,
yeah.
from a tax audit standpoint, um, I have found that lots of times, people want to put their head in the sand, and just hope it goes away.
Yeah.
When somebody comes to you that they're having an audit, what are some of the common mistakes that they're making before they come to you?
I think the hardest thing is people will come to us and be like, I have 2 days left to respond. It's really not a good thing to put off. Like the day you get that notice, like you should be contacting someone to help you with that audit. So I would say that's probably the biggest struggle we see is like they come to the firm and it becomes like an immediate fire drill. Like we have to
Sure.
respond as fast as possible, which it makes it harder. I guess it's typically harder on the petitioner, but it's something that could be avoided. So that number one, number two is bad record keeping or just having failed to get things at least a little bit organized. Like I've had it where people have come in with like a box just full
Right,
of receipts and I'm like, oh no, I get it, not everything can always be digitized, but having some kind of, organization of at least like the years, or the type of expense for each year, even better.
right.
Uh, but being more organized, being more proactive, those would be the two things that people could do a little better going into an audit. And then three, like just sharing all of the information with the person defending the audit. Sometimes people will hold back something because they're like embarrassed. They think they made a mistake, they lost like a really big receipt and they think it's going to be an issue because they don't know the Cohen rule, and things like
Right.
that, where, just being transparent, because that is something we sometimes run into is people will be like, well, I felt really stupid, or like I didn't think it was relevant, and it's like something very important to know. So just transparency is the third.
So, because a lot of people don't know, can you explain the Cohen rule?
Yeah. So the Cohen rule, that is from a tax court case. And essentially, it comes up in a lot of cases where people fail to keep receipts or proper records of their expenses. And it allows you to, if you have to, take a reasonable estimate of what that expense was, or, you take a reasonable position related to it. So let's say you lost your receipt, but there's a transaction on there for a hotel, and you're like, I had a business trip for this conference, during these dates, and that was a travel expense or a hotel expense, for that business trip, and being able to tie it back. So it's not the end of the world if you lose the receipts. You obviously shouldn't, and it makes it very hard in sales and use tax audits. That's really where it's not as helpful. But in income tax audits, it can be like a big saving grace. So sometimes people like they don't want to bring things up, or I've also run into where they just kind of drag it out being like, I'm still looking, I'm still looking, but just giving someone a heads up in the beginning, hey, I might not have that. So
Right,
then it can again proactively be addressed, and just being transparent, because I have literally had that where, and we're relying on like these receipts coming through, and then we have like 2 days left to respond, and we are like, okay, fire drill again,
right.
you know so it just, yeah, makes it difficult if you're not transparent.
Yeah, I know one of the things that we suggest to people, lots of times, especially with the credit card receipts, if you're not keeping stuff electronically, to take and make a copy of that credit card receipt, because lots of times it's on that thermal paper that will fade after a while, that
Yeah,
disappearing ink, and
holding it
you
up to the
know
light.
right, exactly. So it makes it, more difficult. So I think that's good, another good tip for people to think about. I mean, because again, so much of this does come down to record keeping, and making
Yeah.
sure that you're keeping the proper records and things like that. And many people think that, oh, if I have my credit card statements, I'm good.
Yeah.
But as we all know, especially now with like, you can order anything from Amazon. It doesn't mean that it's necessarily
Yeah.
office supplies. You could be buying whatever, or if you go to Walmart or any of these other places,
Yeah.
there's so many things that are there. Um, can you talk about, because earlier you talked about, hey, I'm having a bad year, I'm not going to pay myself type thing. Talk about payroll taxes and those obligations and why
Yeah.
I'm going to say payroll taxes are the very first thing you make sure you pay.
Yeah, no, that's a good point. Yeah. So, the thing a lot of people don't realize is, even being a day late, you're going to be penalized for the payroll taxes. And that's a 2% penalty, just like that. And then the penalty, it goes up to 10% if you haven't received a notice, 15% if you have. So it just snowballs. And then that penalty, along with the underlying tax, is subject to interest. Interest is currently 8%, so it's not insubstantial or anything. So, just you're supposed to be making those payments either semi-monthly or monthly, depending on your, the amount of payroll taxes being paid. There's nothing that will count against you if you make them semi-monthly and don't have to. It's like always better to do that, even if you are a monthly filer. Something I like about QuickBooks Payroll, for example, this is why I'm not like paid by QuickBooks. I'm just a big fan, but it gives you the option where you can now have it automatically pull those taxes out, and it will just repatriate it and pay it to the IRS for you, or the local, same with the income tax. So the local taxing authorities and all of that. So then you don't forget, because sometimes, and oh my gosh, we actually see it a good amount. Someone will forget one payment, and then they don't properly apply the next payment. So then the next payment's late, and then the next one, and the next one, and then
Right.
it's just like this whole disaster. So, I say avoid like the plague. Do not, try to mail off the checks or anything like that. If you can avoid it, like try to have it set up automatically. If you can't, you can pay it online, which is always a little better, but you should always avoid doing the paper checks, in my opinion, because, there's a stronger likelihood it's going to be misapplied. And then those penalties and interest are just very, very severe. So, that's the big thing. You can cap out the penalty after literally 10 days. So it's pretty nuts. So like you said, it's like the first thing you're going to want to pay and everything. So yeah,
But
that
but
is.
so you as a business owner, if you don't just say that, hey, I'm having a real bad year and you haven't paid those payroll taxes. What's the penalty, or what can happen to you as a business owner if these aren't paid, even if you have an employee that you're paying to do this and they don't do it? What's my liability as a business owner?
Yeah, so the collections process will eventually start against you. They'll start to send you notices. Obviously, you're going to be receiving those penalties. The interest will start to be assessed and all of that. But if you fail to respond to the notices and you get to a certain point, they can garnish payments from your accounts. They can levy payments from your accounts. In the event of an individual assessment against you, then they can also seize your passport, or they certify it to be seized or suspended, so they don't do it themselves directly as the
Right.
IRS. But,
Right.
those are, and they can, of course, file a tax lien, which, isn't the end of the world, but it should be avoided if possible. So they have a lot of enforcement ability. The most common thing we see other than tax liens is when they just garnish the amounts out of your account. The good thing is if someone does owe FICA and they're not able to pay it back, like they can still file an offer in compromise. And interestingly, there's a special caveat where, an LLC is generally a disregarded entity. So everything, they're going to pull in like all the individual information to submit an offer. But if it's solely an employment tax liability, there's an exception to that rule, and it is no longer a disregarded entity. So it's easier to resolve, because then they're only looking at the assets of the business. Because when it's disregarded and they're like, we want to know like your personal car, like
Right.
furniture, jewelry, and it just gets a little too much. but people can still submit an offer in compromise, do an installment agreement. There's first time penalty abatement and reasonable cause penalty abatement. So, there's ways to resolve it, but yeah, hopefully that answers your question.
Yep. So, if somebody's not going to use, your firm, obviously, to do, work for them, what advice do you have for them when they're looking for, I'm going to say a tax preparer, type person as compared to a CPA, as compared to, a tax attorney that offers those services? What are some of the things that you think are important that they really need to look for?
So, I do think credentials are very important. Being a CPA really does hold a lot of weight. Anyone can hold themselves out as an accountant. You can say, hey, I just got my GED or my high school diploma. I'm an accountant, but as a CPA, you have to sit, you have to sit for the test, go through, I don't even know how many hundreds, thousands of hours of schooling to become a CPA, so your stuff. So being a CPA, that's very important for who's preparing your taxes. Sure, you might save a couple bucks, but the likelihood that they're going to, know everything that applies to your specific case is unlikely. They're not going to be keeping up with changes in the regulations and the tax code or anything like that as much. Just like regular tax preparers
Sure.
versus CPAs. CPAs also can actually practice before the U.S. tax court. So they're not really limited. They're basically equal to tax attorneys. The difference with tax attorneys and CPAs are tax attorneys we very rarely prepare taxes. It's usually like, oh my gosh, it's a deadline and there's
Right.
no other way it's getting done. So CPAs, they're more focused on preparing the taxes, making sure all of that's done accurately. Tax attorneys are more focused on, the tax planning and, mostly audit defense, tax court litigation, all of that kind of stuff. They're a little more focused on that, but ultimately they can do the same things. You won't find many tax attorneys that want to prepare taxes, just like you won't find many CPAs that want to argue before the U.S. tax court.
Right.
And then there's enrolled agents, which is another credential. They can focus on some things, but not all things. I don't know all the nuances, but I know they're much more limited than a CPA, and it requires way less education as well. So I always recommend CPAs for any tax preparing kind of needs. It's no offense to non-credentialed accountants, but I just think it shows that you went through school to have this be your profession. You just have a little more in your arsenal that way and everything. So those are really the big differences. Hopefully it's explained well and everything, but
yeah. I mean, because I think one of the important things when you're looking for that professional, that's going to help you is, can they talk to the IRS on your behalf? And again, if you're not an enrolled agent or a CPA or a tech, you can't talk to the IRS on behalf of the client.
Exactly. I didn't even mention that.
I mean, to me, that's one of the concerns. And if I'm paying somebody to prepare my taxes and they can't represent me in front of, the IRS or the state or who I may get notices from, or I may get, an audit from, or whatever, if they can't represent me, why would I want them doing work for me? And it's like, I think it always, kind of goes back to that same thing about having having an attorney help you with your, when you're first starting up your business and your contracts and everything else. Yes, you're paying a little bit more money up front, but it's going to save you so much money on the backside of things. I look at, tax preparation as the same thing. And really having somebody there that's in your, let me say, in your camp to help you when you do have, issues that are going on and stuff like that is extremely important. What are some of the I'm making you pull out your crystal ball here. What are some of the big tax law changes that you see coming down the pipe for the small business owner? Besides, a lot of our current laws are expiring at the end of 25. Do you see anything else that is coming down coming down the pipe here, in the next year or two that everybody needs to be keeping an eye out on?
Yeah, so there are some changes. That's funny though. I was going to start with the TCJA sunset.
Right.
It's still running my mouth. But one big one I want to point out, which is like my favorite change, it's going to end in after 2025 as well. It's part of the CARES Act. It's section 2206. A lot of employers don't know about it, but it's a huge benefit where you can pay up to $5,250 directly, either directly to the student loan provider or to the employee to pay towards their student loans. And those amounts are not only exempt from income tax, but they're exempt from FICA tax. So, if you're giving any kind of incentives to your employees, like, so for me, I give my employees the choice. Do you want X amount, a little bit more, and it goes to your loans, or a little bit less to account for the FICA we're going to have to pay, and that is a huge benefit people really missed from the CARES Act. So again, that's section 2206.
Right.
So that's one I want to point out, because they can still do that for 2024 and 2025. And like, it literally was like never publicized. I'm not gonna lie, I went through, like, back when the CARES Act came out, I was like, I have student loans, let me control F and go through here. How
Right.
can I benefit, but that has not gotten enough attention. So that's a really big thing, kind of circling back to ERC. It's still technically available for 21, but the big change on that, they're probably going to extend the audit statute. So like, people really, like, I cannot stress enough, like, they need to go back and double check that stuff, because they are going to get hit so hard. Accuracy related penalty, that can be 20%. You can have 25% failure to pay, and you're going to have the interest. There could be civil fraud penalties, hopefully not ever. But I'd say that's another big one, because it hasn't been, passed by the House yet, but it will eventually be. And that's going to extend the audit statute. Those are the two biggest ones. Depending who wins the election, there are going to be a ton. So I wish we were a little closer, a couple more months.
Right.
Because, it's going to substantially change. I think, if Trump wins the TCJA, like, most of that is going to stay. But if Kamala wins, most of it's going to go and never come back. And there are going to be changes to the tax rates and all of that.
Right.
Those really are the biggest things, I'm trying to think of like the really niche one-off things I know. I mean, where I am right now, I'm in the CNMI, actually. They just passed something. It's kind of like Puerto Rico, where exports will be tax-free. And here is very unique, because they don't actually really pay federal income tax. They pay FICA and all of that. So they have a very low tax rate. I mean, I think that's more territorial focused, but that's a very interesting one that came out. Trying to think of some others. I feel like those are probably the three biggest ones that I think will have a substantial impact on people, because the rest are very like industry niche.
Yeah, I think the paying off your employee student loans, or not paying them off, making a contribution towards them. I do think that's one that was a big one that a lot of people did I'm going to say sleep on, because they're not looking at that. And again, I always look at it that instead of paying that employee that bonus, you get, you pay towards this. So then that way it's a deduction for me, but they're not having to report that in their taxable income. And then no payroll taxes are being paid on it. So it's, definitely I think it's a win-win for everybody.
Yeah. 100%.
So Tina, what have I not asked you that you wish I had?
I would say, maybe a little more on the local end of things. A lot of people don't realize local versus IRS.
Right.
The local governments also have the same authority as the IRS, essentially, where they can file liens, they can levy you. But another crazy thing they can do is, they can suspend like your driver's license, your business license, your vehicle registration, like all types of crazy things. So, my biggest thing that I want to touch on is like, be proactive with your taxes and all of that. don't forget the estimated tax payment deadlines coming up. That is probably like honestly, the number one way that we get tax controversy clients from self-employed individuals, or they just forget their estimated tax payments. So, being proactive through the year, making sure you're setting aside money for taxes and planning ahead and making sure you're not, sleeping on any tax credits or tax benefits, just like Section 2206. I think that one's great, but even like the work opportunity tax credit, people will overlook, and they don't bring these things up proactively with their CPAs or anyone to allow them to look at it and be like, hey, I'm looking at hiring new employees, and then they can go through that kind of stuff and be like, oh, because like, for example, I had someone be like, oh yeah, like I just hired a couple of veterans and all of this. And I was like, oh, did you claim the work opportunity tax credit? And they're like, what's that? And I'm like, oh no, because that for veterans, I think it's up to 24,000 you can get.
I think it is. Yeah.
Yeah. So it's substantial, but just proactive tax planning. Don't put off especially not FICA. I think we established that one, and estimated tax payments, like they are so important to make.
Right. So Tina, people like what they hear and they want to reach out to you. How can they talk to you?
Yeah, so they can always send us an email it's info@azarvandtaxlaw.com. So AZARV as in Victor, AND. I know it's not easy. Taxlaw.com, or they can call us if that's easier. 410-698-4005.
Great. I really appreciate your time today and enjoyed our conversation.
You too. Thanks for having me.
Thank you. Hey, this week our guest was Tina Azarvand, and she's the managing partner at Azarvand Tax Law. I'll see you guys next week.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.